Bloomberg Audio Studios. Podcasts, radio, news.
Let's move on to our top story this hour, because private equity is making a big splash in pro sports with two major deals in basketball and baseball this week. The Boston Celtics today reaching agreement to be sold to a consortium for $6.1 billion, making it the largest sports takeover deal ever. While 2 days earlier, the San Francisco Giants announced they sold a 10% stake to Sixth Street Partners. We're so pleased now to bring in one of the savviest investors in sports, and he is Marc Lasry. Marc bought a 25% stake in the Milwaukee Bucks in 2014. He sold it 9 years later in 2023. Marc is chairman and CEO of Avenue Capital, which has its own sports fund. Great to see you.
My pleasure. Thank you for having me.
So let's talk about that $6.1 billion price tag for the Celtics. The Washington Commanders fetch $6.05 billion, so this is the biggest deal. The Celtics might be reigning champions on the court, but they don't own their own court at TD Garden. So I'm curious what you make of this price tag.
Look, I think it's a great price for the league, and you had 4 people who wanted to buy it, so it was a competitive process. The fact that they got $6.1 billion, it's great for the holders, for the folks who own the Celtics today. But I think it's a high price, but it seems that's where teams are selling for today.
Back in the day, you had said that you paid too much for the Bucks, and at least at the time you thought you did. I guess when it comes to wondering whether they paid too much for the Celtics this time around, because the real estate was not part of that component, I got to wonder, how much more should it have been if there was real estate involved?
It probably would have been more, because you would have made more on the team because of owning TD or the Garden.
Yeah.
And the question is, will they try to build their own arena? And they may do that. But at the end of the day, like when we bought the Bucks, we had paid the most for any NBA team, and that was about $550 million. Today.
That's so funny now.
I know, it does. It sounds funny. And when I sold, I thought that was a great price, around 3.5. So, look, I knew at the time that when we sold, prices would probably go up. I think because of the new media deal that got done, prices have gone up a lot more. I thought Adam Silver had done a phenomenal job in getting that new media deal, and I think that's what's spurring these new prices.
All right, we just have some breaking news for us here. Is Nike just going to give out the earnings here? Nike third quarter earnings comes in at 54 cents a share, well below estimates, about 77 cents a share. Revenue, a little better than estimated, though, coming in $11.27 billion. We were looking for about $11 billion estimate, so definitely better. China, though, not great. That EBIT coming in at $421 million, in inventory still a little high at $7.5 billion. Looking at that stock, though, pretty much flat, so digesting that reaction. Marc, does this make you want to get back into pro NBA?
Yeah, look, I think there's a lot of growth that's still going to happen. I think part of it is going to be, hopefully, when they end up having an expansion team. We've been looking at Vegas. So we'll end up seeing what happens.
What, you think that the froth is done at some point? I'm just trying to understand how you can suck more value out of something that doesn't have the real estate yet. How do you get more value from them? Well,
I think the way you'll get more value, look, you only make money in sports 3 ways. So it's ticket sales, sponsorship, and media. So if the Celtics win again, they'll be able to raise ticket prices anywhere between 10 to 20%. If you have a team that's the worst in the league, that team is still raising prices 5-10%. Nobody stops giving up on their team. It's actually one of the great little secrets about pro sports. Every year, the whole mantra in sports is next year is our year, right? And everybody believes that. So I think you're always going to see that teams are going to keep on growing at sort of anywhere between 10% to 15%. I think if you own the real estate, you'll end up growing faster because you can end up having concerts. You can do everything within your own arena. So I wouldn't be surprised if ultimately the Celtics end up building their own arena.
When it comes to the Vegas franchise that you're considering, that you're weighing, have you thought about where that franchise would play?
Yeah, we've been looking at a bunch of areas in Vegas. I don't want to talk about it because if I do, then those guys will raise the price of where.
That's how it usually works.
Yeah, that's usually how it works. But I think for everybody who does something in Vegas, it'll be at the T-Mobile Arena, at least for the next few years, until people are able to figure out where they want to move the team to.
All the sports franchises are looking overseas to expand their brand and their market. The LA Dodgers with Shohei is a perfect example, right? They've got this built-in Asian fan base. What's the single best way of doing that for teams that maybe aren't obvious candidates for international fans?
Well, I think first, if you win, people love that, right? So for us, we had Giannis, and because we had Giannis, you wanted to play games in Greece. We never did, but we ended up playing in Europe. We ended up playing in Paris. We played in London. So part of when you have international players, wherever they are, you want to try to end up playing there because it just feeds that popularity. So I think for every team, what you want to do is you want to grow outside your market, you want to grow in the U.S., and then you want to grow internationally. And a lot of that is the media. And that's sort of what everybody is seeing, that all these teams are becoming global in scope as opposed to what they were, which was national in scope.
Or even regional.
Or even regional. I agree with that.
What are you most excited about right now?
For us?
Yeah.
I think our sports fund is very exciting. We've invested in a number of new leagues that are doing exceptionally well. We ended up investing in the Orioles, and we're very excited about that. But in a number of the investments we've made, we've already seen prices that have gone up already about 50% plus.
Wow.
So what you find in new leagues and new teams is if you're right, it's going to grow exponentially. Right, so the whole key and the nice thing about that is you see the ratings the next day. So I can tell you if it's grown. Like we've invested in PBR and professional bull riding. That league is growing 30% plus a year.
There's professional bull riding?
Yes. Do you want to get on a bull? You'll end up. If you could stay 8 seconds.
I know. This sounds awesome. Do I have to go? I don't have to go to rodeo for that. That's
no. You could do it. We are here in New York.
Okay.
We own the New York Mavericks, so you can come anytime you want to go.
Okay.
Come. You'll love it. Yeah, we'll chat offline.
So you own little bits, and then it grows exponentially. What area would you not touch right now in sports?
I don't want to touch leagues or teams where we think you've got flat growth.
Okay.
Right? So when you're doing a new league or new team like TGL, we ended up doing that, the golf league that Tiger and Rory started. A lot of that was how many people were going to watch it. And what you've seen is they've had great growth. Over the course of the year, just had the semifinals. The finals are going to be this Tuesday. It's actually been going great. And you've had more people tuning in than you thought. Originally, we thought it'd be 250 to 500, and it's been about 750 to 1 million. So that's letting you know that people love it and people want to be a part of it.
When it comes to TGL, it's a new simulator golf league. It feels like the ticket sales might be capped, right? Because it's in this arena. So then you have to really rely on those other two legs of the stool that you were talking about, media and sponsorship,
That's
to
correct.
really grow that business. How is that looking right now? I mean, this is the first season, so you've just gotten started.
We've gotten started. What's happened is you've had more people watching it. And as more people watching it, you end up having more sponsors who want to be a part of that. So it's actually gone far better than we thought. And, the only problem with it, I would tell you, is we lost our match a couple days ago.
Yeah.
I thought it would have been nice
You
to win.
did make it to the playoffs, so.
We did, but Stevie Cohen's in the playoffs, Arthur Blank's in the playoffs, so we'll see who ends up winning. But that'll be a pretty nice championship for either one of them.
I'm just really into the fact that you can watch it in 2 hours. Like, that's huge.
But that was the whole key to it.
That's a game changer for me.
No, it is, and that's exactly it, because the problem I think that TV or media had with golf was it was 3 or 4 or 5 hours.
Interminable.
Forever.
It was long.
It was forever, yes.
So now that it's 2 hours, you've got a lot more people watching, and they love it, and they love the interaction between the players.
You've also invested in women's sports, and I know that you're looking at that very carefully. Where are we in the trajectory of the valuation of those teams? Are we in like the second inning, the sixth inning?
I think you're in the first inning.
Wow.
I really do. If you think about it, 5 years ago, you could have bought a women's soccer team for $1 million. Today, they're trading around 150 million. We've ended up starting to buy women's soccer teams in Europe. And part of the reason for that is we think right now they're undervalued. but we've invested in unrivaled. You want to invest in women's sports. And the reason you do, so here's a nice little tidbit of information. When Caitlin Clark played in the women's final in college, you had close to 19 million people who watched that. By the way, that is more than I've ever watched a Stanley Cup Finals game, more than I've watched a World Series game, right? So, and it's pretty much almost as much as watching NBA Finals. So that's great. The fact that you ended up having a women's NCAA basketball game and you had all those people come, what it's telling you is there really is a change that's happening. And that change is very simple. When I was a kid, if I went to a baseball game or a football game, my dad didn't bring my sisters. It was him and I. Today, the idea that you would not bring your daughters is inconceivable to someone. And so because of that, your daughters are going to games, they're playing, so it's actually been great.
Oh, sorry, the Stanley Cup, that was hurtful for Scarlet. But anyway, this is where I'm going to pair sports with the macro environment.
Okay.
A lot of uncertainty. CEOs are on the pause button all the way. How does that and all the uncertainty in D.C. affect sports? Like, how do you view through that lens?
I think it's the one thing that people...
It's immune?
I would never tell you something's immune, but I would tell you for the short term, I think it is. But part of that is because people want to be part of something. They love sports. They love going. So I think you're always going to have that. Look, during COVID, it was actually kind of interesting. During COVID, people wouldn't come into the office, but they would go to a stadium. They'd go to an arena. They'd go to it was outside. So you still had 30, 40, 50,000 people showing up. What that tells you is people want to be part of that, and they're always going to want to be part of their sports team.
Do you find better value in sports assets right now than in the conventional markets, the public markets, or private assets, debt, anything else?
I think depending on where you're investing in sports. So I think in our core business, we're able to make about 10, 15% a year because really what we're doing is lending money. I think in sports, especially in sort of emerging leagues, you can make multiples of that. You can make sort of 10, 20 times your money. And I think in sort of the big four, over 20 years, the IRR of that's been about 11%. So if I think over the course of the next 10 years, I'm still going to make 10, 15 in sort of the big four, I would do that.
Interesting.
Broadening out, because for our broader viewers, what do you like in the non-sports market right now?
Well, really what we love is lending.
Yeah.
And the reason we love lending...
You and a lot of other people right now.
Yeah, but the reason for that is you're not taking the equity risk. Right? And if you can make, in today's environment, if you can make 10, 15%, people want that. Right? It's very safe. You're not taking as much risk. And when people are nervous, what they want to do is take less risk. So for us, we're able to lend and sort of generate those returns. So that's really positive.
What do you need to see for people to be, and you, to be more willing to take on risk then at this point?
I think what you want to see is you want to see positive GDP growth. You want to sort of see in excess of 2%. Part of it is really what's going to happen to interest rates, right? The lower rates are, the more people are going to take risk because there's just more capital. The higher rates are, the more people are just waiting, and that's sort of what you're seeing today.
I'd love to just, as we wrap up, get your perspective on the uncertainty that we're seeing in the markets and the economy today versus any other time. Like, you've lived through a lot of cycles. How does this compare?
Oh, I don't think this is
that big of a deal?
No, I really don't. You've had real recessions. You've had real issues in my career. I think what you're looking at today is just, it's a little bit of what you said. People are nervous, so people are waiting. The real question is, how long do they wait? Do they wait 3 months, 6 months, a year, 2 years? If you're waiting a long time, then you've got a real recession. If it's 3 to 6 months, then what you've got is sort of GDP that's flat, up 1%. I would be more nervous if 6 months from now I'm back and in essence people are still nervous.
Right.
That's what you've got to look at. So that's what I would try to do.
And of course it all depends on what this guy on the screen says and does to get us to that 6 months clarity.
And he's obviously coming back now in 6 months, so thanks for that deep tease.
Thank you.
Thank you so much. A pleasure spending time with you. Marc Lasry is Chairman and CEO of Avenue Capital.